Welcome to Taking Stock. I'm Amanda Lang. Coming up in the show, as mortgage rates rise and costs stay high, will real estate developers buckle under the pressure? And is inflation made worse by a lack of competition in business? Plus, long-term care seemed to fail Canadians in the pandemic, but is the for-profit model to blame? That's all ahead. First, for the week that was in business, it's time for the briefs. As expected and widely telegraphed, Canada's central bank raised interest rates this week. The half a percentage point move to 1.5% is still below pre-pandemic levels, but was swiftly followed by the major commercial banks, which raised their own lending rates in lockstep. The best rate they now offer, the prime, is 3.7%. More hikes are expected as inflation continues to sit at multi-decade highs in Canada.
We have to get the policy interest rate up further, get it to 2% by July. We're going to need to go beyond that. I think borrowers need to be braced for that.
New inflation data from Europe this week underscored the problem. It hit a record there of 8.1% in May. Concerns about what happens if the housing market corrects in Canada got new life this week after disappointing numbers on economic growth. At 3.1% in the first 3 months of the year, GDP growth was below expectations. A jump in wages also suggests that inflation worries will continue to dominate in the months ahead.
We've already seen some of that showing up in real estate markets, and certainly it's going to have a dampening effect on that recovery in consumer spending.
Tim Hortons faced the damning conclusion of a 2-year investigation into whether its app violated its users' privacy. A resounding yes came from the federal and provincial privacy bodies, concerned that Tim's tracked users' locations even when they weren't using the app, and that a third party which collected the data might then have used it for its own business purposes. Tim says it stopped tracking customers in 2020, but the Privacy Commissioner notes that other apps might engage in similar tracking. Congratulations, it's a Canadian. Flair Airlines has won a key ruling into whether its ownership structure is Canadian enough to keep flying. The discount carrier had run into arcane rules about airlines in Canada having to be Canadian-controlled. Turns out it is, or at least enough to pass inspection. The company's CEO says it has always been compliant with regards to ownership rules.
The CTA's come out overwhelmingly and very clearly to say Flair is a Canadian airline.
It's good news for travelers who care more about price and competition than they do about protecting Canadian turf. Rogers and Shaw have agreed to temporarily put their deal on hold while they negotiate with the Competition Bureau. It has raised questions about whether the combo would kill wireless competition in Canada and hurt consumers. The telecom players will try to appease the Competition Authority. If they can't, they say they will fight efforts to block the transaction. And those are your business briefs. No question, rising rates are having a cooling effect on parts of the real estate market. One thing does seem clear in recent trends. Condos, though, are still hot commodities. Will that last? What does it all mean for the people who build the homes? Barry Fenton is president and CEO of Lanterra Developments. Barry, great to have you with us.
Thanks for having me.
We focus a lot on home buyers and sellers, but what about the builders? For developers, what are you watching for in terms of when this market starts to feel risky to you?
Well, of course, there is a lot of noise out in the marketplace, and I do look to see the investor and the end purchaser want for a product, but I haven't seen a lack of demand yet. And I also look at interest rate components, and I can still see that the variable rate, for example, that's being offered by the major banks is still in the 3% level. So, and that would be for a 3-year variable rate. So I look at those indicators, and things still look pretty good.
And on the other side of the equation, of course, for those that build the properties, there's your own borrowing costs, there's the labor issues, there's supply chain, there's commodity prices. Does the math still work for the industry?
Well, when you think about it, we sell something on a Monday and we have 4 years to deliver it. And we do outsource and negotiate long-term contracts with trade. So there's no question that there is some pressure on the commodity prices right now and some pressure on trades wanting to complete jobs based on contracts we have in place. But we haven't had a major issue to date. And I actually think that this whole inflation discussion is like the COVID discussion from the last 2 years, and that over the next 12 months, we'll see an easing on the inflation discussion, and we'll be back to full force, especially in the condo business side.
We do talk a lot about the supply side. You've been integral to building more condos, certainly in Ontario. Do you expect to see more, though? Will the zoning change so that we get more building of multi-family kind of building rather than those single-family homes?
Amanda, the condo business is a specialty business, and I think that we're going to continue to have an issue where there's a lot of demand and lack of supply. And we, 20 years ago, created a new word called condominiums in downtown Toronto, and it has so much more room to go. So I think even with the city complexities, sometimes the condo business is there for the long haul.
Barry, so good to have you. Appreciate your time.
Thank you, as always. Thank you.
Barry Fenton, President and CEO of Lanterra Developments. Coming up, there are all kinds of reasons we have inflation right now, but is one of them a lack of competition? Stay with us.